Welcome to the Landlord Chick podcast, the podcast that helps you take control of your real estate investing journey one step at a time. I'm your host, Karina Brown Ufinger, and each week we dive into strategies, tips, and stories from the world of real estate investing to help you build wealth, create passive income, and achieve financial freedom. So, in this week's episode, we're actually going back to a listener request that came in from the summer. I was stockpiling your listener requests, guys. So I was still looking at those. I was putting them on the list. So I thought, what better way to really get into this is to actually do a listener request. And the listener request was for a recap of single family home rentals versus multifamily home rentals. I figured, you know what, we can do a complete rehash of this because the last time I recorded an episode on this was back in 2021. And I think it's important to kind of discuss how the real estate market has probably changed the approach overall to investing, and how I believe at this moment, single family homes probably are even harder to make into rentals than previously. So, first, I want to kind of start with just some general definitions to make sure we both know what we're talking about here. So, single family home, I think generally may be pretty self explanatory, but just really quickly. Single family home is a property that only has one tenant in it, and it's only built for one tenant. So most people in the United States live in what's called a single family home. So there you go, single family home. Multifamily. Now, when we talk about multifamily in this podcast episode, I want to be sure we understand we're talking about small multifamily. So we're talking about your duplexes, triplexes, and your quads. We're not going to be talking about 20 units, apartment complexes, things like that. When I say multifamily, we're strictly referring to those smaller ones that have 4 units or less. I think that's the most fair comparison because honestly, you start talking about 20 units and even 10 units, you're in a whole different ballpark anyway. So that doesn't make any sense to have any conversation comparing a single family home rental versus a medium to large multifamily rental. Okay, so first let's talk about kind of the logistics of renting out the single family home. Again, maybe generally self explanatory, but let's make sure we all know what we're comparing here. So let's look at the utilities with a single family home. Single family home, generally speaking, all of your utilities, with the exception of trash, are going to be paid by the tenant as long as it's occupied. Pretty good deal. Now, I say trash because at least here in Wisconsin, that appears on your property taxes. Maybe it's different. In your state, it's possible that your trash is on your water bill, which then maybe your tenant would be paying for trash because the tenant pays the water bill. So the tenant will pay electric, gas, water, sewer, and then I guess trash, depending on what your setup is. So that's good. Let's look at repair and maintenance. So, what do repair and maintenance look like in responsibility land? Like, who's responsible for what? Well, in a single family home, you're going to have the tenant responsible for the lawn care and the snow removal. Now, the great thing about the lawn care in regards to a single family home is that that also includes any flower beds. So, if there's any flower beds along the property, they're in charge of maintaining those as well. I wouldn't put tenants in charge of tree work. That's just sort of asking for bad news bears. So, tree work would still remain, in my professional opinion, with the property owner. But really, a lot of other things in regards to exterior work, as far as the yard and nature, is going to be on the tenant to take care of. Now, the repair aspect, this can kind of vary based on your approach as a property owner that rents a single family home out. But sort of the generalization is that there's a few differences between repair responsibility for a single family home versus a multifamily. So, with a single family home, clogged drains, things like that, assuming it doesn't come down to it being the sewer line, clogged drains could be the responsibility of the tenant. They could be responsible for getting a routing company out there and having a drain routed, things like that. So that would be a plus. Single family homes, typically you can have them in charge of all the light bulbs, whether they be exterior, interior, in the garage, things like that. I would say that you wouldn't want a tenant to be in charge of any light fixture bulb that would be hazardous to replace. So if you think about maybe a property that has a cathedral ceiling. So a cathedral ceiling is a very tall ceiling. We're talking like 20, 25-foot tall ceilings. They're at an angle. Maybe there's a ceiling fan up there. You definitely don't want to have the tenant responsible for changing that light bulb because they probably don't have the equipment to do it in the safest way. So, in that regard, you would still be responsible for that light fixture. But generally speaking, you can put a lot more of the lights on the light bulbs, I should say, on the responsibility of the tenant. There are also, I do know that there are some single family home property owners that use sort of the rule of minor in regards to rent. So I do know some single family rental property owners that make the tenant responsible for changing out broken doorknobs, make the tenant responsible for changing out a bathroom faucet that leaks. So I do know that there are landlords that go that route with single family home repairs. I think that's all up to you. I don't necessarily want to say I have a personal preference on that either way because I actually haven't managed or owned a single family rental where I have had tenants responsible for those sorts of things, but it certainly is an option. Now, in regards to how long a tenant stays in a single family home, I want to go back to a study that I saw in 2019. So, 2019, the average lifespan of a multifamily tenant was 2.5 years. I don't know what COVID has done to that timeline. I don't know how it's changed it. So, in a way, I feel like I'm using pretty out of date information, just not only based on the fact that it's 5 years ago, but that 5 years seems like a long time ago, given COVID and everything that's changed. Now, that same study found that single family home tenants stay for an average 5 years. So that means basically double the length of tenancy of a person in a multifamily. There's a couple reasons as to that. There's certainly this idea of ownership, quote unquote, when you rent a single family home. But then also there's this idea that you don't have any sort of like tenants that are interfering with your other tenant. So you always have to have the one tenant on the property. Sure, maybe there's a neighbor, but typically neighbors aren't. I don't want to say neighbors aren't ever an issue with single family homes. Sometimes they are, but generally speaking, you're not going to have anywhere near the amount of issues, let's say, between neighbors than you would between tenants. So that's another reason that they tend to stay longer. But then also, typically speaking, the people that rent single family homes are those with families. And most parents don't necessarily want to be moving their kids around frequently. So that's another reason that they tend to stay put. So there's a couple different reasons why they stay put and why that length is considerably longer for single family homes. So that's renting out a single family home. Multifamily, obviously you've got multiple tenants. Now let's look at the repair and maintenance situation. So generally speaking, repair and maintenance, you're going to have a little bit more wear and tear in a multifamily unit than you would in a single family unit. I don't necessarily want to make a blanket statement that says multifamily tenants are harder on the units. I kind of hesitate to say that, but I do want to point out the fact that generally speaking, you will have higher repair and maintenance costs for a multifamily per unit than you would in a single family home. And it could be just the stage of life that generally those tenants are in. There's a lot of different reasons as to why that could be. Some of it might just come down to like the psyche of very much viewing their unit as an apartment because there's another person living in the same building with them versus a person living in a single family home. It's sort of like this ownership psyche that kicks in a little bit. Especially if they're not really encountering you as their landlord personally a lot. It just over time begins to feel like it's their home. So repair and maintenance, you're going to have a little bit more in that regard. Then of course, you're going to have some common area expenses. So maybe you have doors that are needing to be repaired and opened and closed by 4 different tenants, 3 different tenants. Common areas can obviously increase repair costs, not substantially, but they can contribute to increased repair costs. Then you also just have to consider that you're maintaining 4 units instead of just one. So there will be sort of an increase in repair and maintenance costs. Now, we talk about lawn care and snow removal. Generally speaking, with multifamily, I don't recommend that you have a tenant responsible for snow care, which means that you are going to be responsible for that as a property owner, whether you do it yourself or you offload it to somebody else. But the reason is because there's a large amount of liability when it comes to ice and snow. If you don't live in a winter climate, I would say hands down one of the biggest concerns, I think, for any landlord in general as far as liability, it comes from this idea of snow and ice management. So if you give it to a tenant in exchange for reduced rent credit, if they don't do their job, then you are possibly facing lawsuits from trips and falls, things like that. I do say you do have to consider the cost of snow removal for multifamily, but I think it's worth it in the long run. Lawn care, I still prefer it being outsourced. A lot of that just kind of comes back to nuances of it in Wisconsin, because in Wisconsin, if you reduce your rent credit in exchange for a tenant doing lawn care, you aren't getting rid of liability for it because they're still doing it for you. They aren't an independent contractor who works for other people, which means really you still have this liability aspect of if they hurt themselves with the lawnmower, they could still sue you. So I really don't recommend lawn care either for that reason for the state of Wisconsin, because it is still this employee-employer relationship and you could still be on the hook for some things. So generally speaking, that's how you're going to go with repair and maintenance, things like that. Your tenancy lifespan, we just talked about that. It's typically about 2.5 years. Obviously, we all have tenants that stay a lot longer than that. We have tenants that stay shorter than that. That's why this is kind of like an average. You can easily end up with a person staying in a multifamily for 7, 10, 15, 20 years. Just all depends on sort of luck of the draw, I guess you would say. So if we're looking at these strategically, as far as what's best, we got to break it down in a couple different ways. So first, we got to look at the financials of it. So first, let's just consider generally a single family home and the rental aspect of it. How much rent income you're going to be bringing in. This is pretty simple, guys. You're bringing in one rent. Single family home, just off the top of my head, let's just say, for Wisconsin here, we could rent it for $1,700. I think that's probably average. I'd say if we're going statewide, that would be kind of an average, $1,700. Now let's look at rental income that you would bring in for multifamily. So multifamily, you know what? Let's just say we're talking about a triplex. Let's just kind of split the difference between a duplex and a quad. So you got 3 units in a building. For renting those out for, let's say, $900 a piece, so $900 a piece, 3 units, that's $2,700. Okay, so we're bringing in more rental income with a multifamily, but we already know we're going to have a little bit more expenses with a multifamily. So maybe that doesn't necessarily break down to being more money in your pocket. So let's dive a little bit deeper into this and let's just do a little bit of math here. So let's go back to single family home. We've got $1,700 that we're going to say is for the rent. Let's go ahead and take our mortgage off of this. So generally speaking, you're going to have your mortgage part, your actual mortgage part of it, probably going to be about $1,000. Now we still have to take out your property taxes. So property taxes, let's kind of ballpark it and say like $200 a month. Some of you might be laughing at it like, yeah, $200 a month, that'd be nice. Other people are like, $200 a month, it seems a little high, like maybe $115. But let's just go general here, guys. Okay, so we had $700 and now we're taking away $200. So now we've got, ding, 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 $500. What other expenses do we know we have as landlords? Well, we're going to have insurance. You're still going to have homeowners insurance for this thing. So I don't really know generally for real what a ballpark would be for this, but I'm going to kind of estimate based on like what my duplexes and my quads are. So I'm going to say that we're probably going to end up with something around like, I'd say, maybe I'm totally wrong here, guys. You guys can correct me on this if you want to. Like, please feel free to send me comments later. Say, yeah, I rent out single family. This is totally wrong. I'm going to say $100 a month. Again, I could be wrong, guys, but I'm thinking about $100 a month. Okay, so now we're down to $400. Okay, $400. Doesn't seem too bad, right? Well, we do know we still have to account for vacancy because when we go through budgeting, we've got to be sure and include this vacancy budget so that we know the rental makes sense. So we're going to take away 170, 10%. And no, that's a little high. Let's take away, guys, let's just take away $30. Let's take away $30 for vacancy. I don't know if that pans out to be a percentage per year, but I think 30 is a pretty decent number for that. So we've got $370 right there. That so far is what we're coming up with positive. All right, so we've accounted for vacancy. We don't have to worry about snow. We don't have to worry about lawn care. We really don't have to worry about utilities in a big regard. So you know what we're going to do is we're going to take, again, just a small percentage off. So we're going to take, let's just take another $30. Let's take another $30 off of this 370. So then we're going to end up with $330. Okay, so we got $330 after we're talking about our big expenses and plus taking off some vacancy, taking off some utility escrow per se. The reason I like taking off utility escrow as well is because you end up in a situation where a tenant moves out and they didn't pay the water bill and the security deposit gets used up for maybe rent and damages. You've still got to pay for the water bill. That's why in single family homes, I really like escrowing still for water because it gives you a little bit of cushion in the event you end up with a larger water bill that you got to pay. The tenant moved out and they didn't pay it. All right. So you got $330 left so far. Now, most of us usually have this minimum that we like to see in regards to where we make our money. So for me, I like to see about $250 to $300 positive per unit. We're still technically in that regard. We're kind of sort of barely in that regard. And we still haven't actually escrowed for capital expenditures. So we didn't really talk about this yet, but we should have talked about in the repair and maintenance idea here. But single family home, you still have a water heater that you're responsible for. You still have a roof you're responsible for. You still have a driveway you're responsible for. You probably likely, well, I'd say likely, but 50-50 chance you'll have a garage that you're responsible for. So you've got 4 sort of big ticket items that you still need to be able to escrow for. So we're going to have to take that out of the 330. All right, so we've got a couple things we need to escrow for. What's a realistic escrow for that? A lot of times that's going to vary on what your particular position is. If you still have $50,000 sitting in the bank after a down payment and all these other things, you might not be as concerned about escrowing for these big purchases, these capital expenditures in a big way. But if your bank account's looking a little slim, you are going to be concerned about how you're going to escrow for these things quickly. So if we're talking about these 4 things, we're likely going to want to pull out $150 a month for escrowing for these expenses. So that just put us at $180 a month positive. And I can't even say that's a complete calculation. Now, I'm not saying this to prove to everyone that you shouldn't be investing in single family homes, because I still think they are a good investment. And I think it's up to each individual person and what your ultimate goals are. If cash flow is your goal, I really don't think this is where it's going to be at for you, because that's going to be a little slim. $180 positive, I don't really know. For me, that really wouldn't work. But you can't ignore the fact that there certainly are benefits with a single family home rental. The fact that you don't have to worry about tenant relations in between tenants. You have to worry about a lot of, lawn care and things like that. And generally they can be easier to maintain as a landlord. But the flip side of that would be likely, depending on your budget, you might not be bringing in as much per unit as you could with a multifamily. Okay, so let's start our math over here. Clear out my calculator. So let's go back to our quad. We had $2,700 a month in rental income. All right, so let's go ahead and let's get this mortgage right off the bat. So let's get that off. You guys, let's go with, let's say, 1,000 for this. With multifamilies, typically you're still going to have to escrow for your property taxes. So I think let's see here. We went 200 before, I think, for property taxes. So if I look at mine, actually, I'm just gonna look at mine real quick. I go 4,000 and then I end up I'm surprised. I end up about $200 a month too. Okay. So we have got $1,000 for the mortgage per month. We've got $200 for property taxes. We've got $1,500 left. All right, so let's go ahead and take off our vacancy here. Vacancy, I'm going to put as 65 a month for this. That's probably not very good. You guys are going to fire comments back at me like, yeah, that calculation was so off. Hopefully it's not off to the point that this whole conversation is just pointless. All right, so we're at 1,435. We're going to take off our insurance again. We've still got to, have our property insurance here. So let's go 100 again. I think for me, what I have for my insurance, it's a little high, but you know what? My insurance, I need to fix mine anyway. That's full disclosure. Oh, all right, $100 off for that. All right, now let's go ahead and look at lawn care and snow removal. Let's just make it, even though it isn't all the time the same amount, because, okay, spoiler alert for you that don't live in winter climates, contrary to what the news and pop culture might lead you to believe, it doesn't snow every single day, and we don't need to plow our driveways every single day. So what I'm going to do is I'm going to just say across the board every single month, there's $175 of snow and lawn care services that need to be paid for. Now, there will be some months where you don't have anything, because I think last year, honestly, here in Wisconsin, my properties got plowed a whole 4 times across November, December, January, February, and March. So that's really not a lot. And then lawn care, usually here in Wisconsin, we start mowing our lawns for sure in May. And then we're usually done early part of October, maybe sometimes the middle of October. But so we've got, November, we're not really doing anything. December, snow can come kind of late. So there are some months that you really don't have any of these expenses, but we're just going to go ahead and take 175 off. All right, so now for a recap of our math, we're at $1,160. All right, so we're going to assume in this equation, because there's a triplex, that you're going to be paying for water. I think it's pretty rare that you find a triplex that is separately metered for water. So let's go ahead and take the water off. That's going to be about $125 a month. So we're at 1,035 now. Okay, so we're doing pretty good. Now let's add in repair and maintenance. So repair and maintenance, anywhere from about 10 to 13% of the total rent for the month. So we're going to take off $270. So we're going to take off $270 from our total. My voice is starting to crack already, guys. $270. All right, so we have $765. Now we've got to escrow. We've got to do that escrow. We still got roofs, we still got driveways, we still got water heaters. So let's say we take the same escrow, 130. I don't know if that's going to be good enough. We got more things to escrow for. So let's go ahead and take 200. We have 565. So we have 565 that we have as far as cash flow. And I'm pretty sure, unless, Chris, I'm missing something. I don't think we did utilities. All right, so let's do utilities. Let's do 75 for utilities. That'll cover maybe a little bit of common area utilities and a little bit of escrowing then too. For obviously water, tenant move up, things like that. So $490. $490. You know what? I think we're doing pretty good here. So you can see the difference in the math there. You do have more capital expenditure responsibility, and the math does show that you do have more income coming in. Now, again, that's not to say, hey, guys, single-family home is bad, multifamily is good. Because here's what it really comes down to. Single-family homes tend to be more common on the market. It's easier to find them to purchase. But you have more competition because it's not just landlords or property owners that are trying to buy those. Multifamilies, the pool of people trying to purchase them is smaller, but there's less people that are selling, and there's less opportunity to buy them. So it kind of does, it's sort of like a tit for tat sort of thing going on there. Now, I promise we will look at this in regards to the new market. So case you don't know, literally almost everything that could realistically has changed hands in the last 3 years, meaning somebody else new has bought it. There was a staggering statistic that I recently saw that it was close to like 70% of property in the United States changed hands in between 2020 and the end of 2023. Yikes. Generally speaking, if you guys have been looking at the market, it's tight in inventory. And that's one of the reasons. It's because literally almost everything has changed hands in the past 3 years. A lot of people don't want to sell. Now, when we break it down by type, which one is more likely to sell when it comes down to it? Well, I think honestly, I have to say at this point that I'm going to give the winning flag to single family homes. Because single family homes can be sold for a number of reasons. They can be sold because, people get divorced. They can be sold because somebody gets a job transfer. They can be sold for unfortunate circumstances like a death, downsizing, kids grow up and move out. So for that reason, I think single family homes are going to edge out the availability still when it comes to purchasing on the open market. Because really what I'm seeing, and I say this as a real estate agent, multifamily homes that are for sale now are typically falling into two categories. They're falling into either disasters or they're overpriced and somebody's just trying to see if they can, excuse my French, find some schmuck to buy it for that price. So if I'm approached by a new investor and like, yeah, I want to get invested in real estate investing and I'm not sure if I should do multifamily or single family, here's what I say to you guys in summation. If you want to go for speed, and by speed, I mean you want to acquire something quickly to put your money to use. You have a reason to put your money to use rather quickly. Then I would consider entertaining buying single family homes as rentals. Understand the market is going to be slightly more competitive. You have more people looking at them. You might have to act a little bit sooner and quicker than you would with a multifamily, but I think you might have slightly better chances there. Now, if you're looking for cash flow, if you need to be sure cash flow is there, then generally speaking, I'm going to be pointing you towards multifamily. Because as we saw with the budget, chances are you can end up with more bang for your buck in your pocket based on a multifamily. So that's where this kind of ends up right now, guys. I generally think multifamily still wins for me, but given where we are at right now in the real estate market and how much has changed hands, I'm giving a little bit extra credit to the idea of investing in single family homes because they're more likely to pop up for sale for those other reasons that I talked about than a multifamily. So that is the long overdue episode on single family versus multifamily. So before we wrap up here, I want to challenge you to take action based on what you've learned today. So if you are someone who was like, yes, I needed to hear this episode, I needed to have this conversation. What I want you to do is when you get done listening to this, maybe not right away if you're in your car driving, but when you get home, just run through a couple scenarios for single family homes versus multifamily homes in your market that you're looking at investing in. So find a duplex that's for rent, see how much it rents for, do some budgetary calculations, and figure out what works best for you with your strategy. And then also just look at the MLS for a couple minutes. Just take a look at the differences between single family homes and multifamily homes in regards to what's on the market right now. With multifamilies, I'll say you don't really want to be necessarily very concrete, geographically specific, just because there is a smaller quantity of them. So I would consider going with a larger mile radius just to be sure that you are getting some data, because chances are if you pick just one particular city and say, I want a duplex in this city, depending on the size of the city, you might only end up with like one or two. So you might want to expand that radius, but be sure to take action after listening to this, because real estate investing is all about putting knowledge into practice. So one of the things you can do right away when you stop listening to this, when you have time, is just do some budgets, do some market calculations, get out there, see what rents are at, and just do some own budgetary things for yourself. All right. If you haven't subscribed yet, please make sure to subscribe to this podcast, Landlord Chick podcast, so you never miss an episode. If you found today's episode helpful, please leave me a review, you guys, over on Spotify, wherever you listen to this. It helps others find the show, and it's just awesome because you get notified of things. Like, if you want to track me down, you can find me on my website, riopropertieswi.com, or over on Bigger Pockets, that amazing real estate investor forum and guru site. Other than that, until next time, invest smart and live boldly.